VectorVest is pretty much the only organization that's authorized by the regulator, the FCA. And although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and detailed fact find. So that said, the regulator's off my back, so we can move on. So what we're going to try and talk about, folks, is worry-free investing, to let the ball do the work, if you'll pardon the rugby metaphor. And to do that, it may seem obvious we want capital appreciation. It may seem obvious that we want dividends. And if you were in the US doing this, you can certainly make money by writing the most conservative option strategy called covered calls to actually build an extra income stream. That's largely impossible in the UK. So we're going to be looking at capital appreciation and dividends. If you want to apply this across the Atlantic, then you can do some very conservative options trading. So what we're going to try and talk about is how we analyze stocks, a little on market timing, and then the gist of the worry-free investing strategy. And so three big words. If you're in property, they say location, location, location. If you're in the stock market, it's earnings, inflation, and interest rates. And unless you've been in a cabin in Siberia, you must have heard of inflation recently, you must have heard of interest rates. So as those two fellas go up, then invariably valuations go down. And you can see that reflected in the VectorVest valuations up on our stand. Most of them have in fact flattened off over the last 3 or 4 months as inflation goes up and interest rates have started to tick up. Earnings, of course, are a big, big part. And on our product, the algorithm that's 30 years in preparation has in fact looks at all of the earnings of all of the UK companies, all of the American companies, Canadian companies, Australian, whole of Europe, and puts a valuation to every stock every single day. And folks, we want to be able to answer these questions. What's a stock really worth? And my granddad summarized it, God, a long time ago. He said the only way to make money in anything was to find the value of something and then pay less for it. That's what your investment trust handbook told me the other day as well, Jonathan. Okay? How safe is the earnings stream? Okay? Now, if you're a long-term, worry-free investor, then we want to try and put the safety and the predictability of the earnings stream right to the top of our consideration. If you're a spread better, like this young fella here, in and out all the, then safety's not that important, sir, because you're managing risk proactively with stop-loss orders. You're only in the market for a couple of day or two, okay? If old Vlad has another go, well, you can run for cover. Long-term investors don't want to do that. And then some idea about timing. So I think the most important number on VectorVest is this number. It's called relative value. It looks at the future. And as Mark Twain once said, the future is a very slippery commodity. So we look at the earnings of every share in the London market for the next 3 years. So we forecast the earnings next year, the year after that, the year after that. We do that by buying an earnings forecast from FactSet, which are the world's top provider of such things. We assume that those earnings will be discounted into the share price, and we calculate what that projected share price will be. We then calculate the upside, and we divide the upside by what a corporate bond will pay in the same period. This is a measure of the future. And on a scale between 0 and 2, we want it to be well above 1, i.e. outperforming a corporate bond. And for my worry-free investing, I want the RV to be sitting up at 1.3, 1.4. And that will ensure capital growth. So that's the first thing I want to try and get right. And there's lots of them. The second thing, which is really important in worry-free investing, is the safety and the predictability of the earnings. So the algorithm looks at the past. It looks at the financial statements. It looks at the balance sheet, the income statement, the cash flow statement. It looks at dividends, dividend safety, dividend growth. Very importantly, it looks at sales growth. It looks at sales margins. Sucks those numbers all in and spits out one number, sir, which represents the safety and the predictability of the earnings stream. In our worry-free investing, I want to find shares that are undervalued. I want to find shares that are growing their earnings strongly, a high RV. I want to find shares that have a safe track record of making money. And there's not that many of the damn things. Not that many of them. And the program finds them relatively easily. This measures the trend. That's quite easy compared to the first two. It measures the trend above 1 on a scale between 0 and 2, the darn thing's going up. Below 1, the darn thing is falling. And then we put them together into the master indicator VST, value, safety, and trend. And if you come to our stand, you'll see that all of the stocks on the London market are sorted by descending VST. And that's where the winners are. They've got the best combination of earnings growth, earnings safety, and the damn things are going the right way. Okay? They're no good when they're falling. You're going to end up with a haircut like mine if they're falling. And there's a few people who shouldn't be laughing in the audience at that. We put a buy, sell, or hold to every share in the market every single day. So for worry-free investing, let's keep this simple. I can make life very complicated. My ex-wife told me, Jonathan, that I could complicate the Lord's Prayer. Undervalued stocks, growing earnings strongly, RV, safely, RS, that are on a buy recommendation. That's the prescription. It's a very conservative prescription, and it takes a great deal of discipline to stick to the prescription. That's where the Royal Marine training comes in. Because we're tempted. It's trading at £1. I know it's dangerous, but it could go to £30, and I'd be rich. You would look really well in that little blue Ferrari that I saw in South Kensington last night, son. Okay? You would look really... She would leave him straight away. Okay? So we're tempted. That's Serica Energy, folks. And I've got no... Old Jonathan is going to hoof me off any minute now. It's undervalued. It's got a high RV. It's got a high RS. It's on a buy recommendation. It's got lots going for it. That's the chart. There's the green. That's the valuation. There's the share price. The darn thing's going up. Earnings per share is rising. They've all flattened off a little bit. Interest rates and inflation. Okay? That's Anglo-American. I used to work for them. I lived in South Africa for 35 years. Went there to play professional rugby. Everybody says I'm too small, I know. But 37... It's worth 49. There's the RV, but the RS doesn't cut it. You see that? RS is low. This is a speculating stock, sir, for that young fella there. He's still got a full head of hair. He hasn't done much speculating. That'll go quick. Okay? So it's on a buy recommendation. That's an aggressive stock. It wouldn't fit the bill for worry-free investing. That's the chart. And for those of you that are aggressive investors, I was in that. I spoke about that on Core Finance some weeks back. So the last little bit of the prescription, ladies and gentlemen, undervalued stocks, stocks that are growing earnings strongly and safely, that are on buy recommendations, and we want to be strong in the market when the general market is rising, and we want to be wimps in the market when the general market is falling. Okay. Watching your stop losses carefully. So if the general market is rising, you want to be fully invested, gung-ho. If the general market is falling, you want to be running and very careful indeed. and we put a number to the general market every day. There's that young fella who's trying to ignore the general market. That's my metaphor. They go up very slowly and they fall very bloody quickly. Okay? Have you been on one of these things recently? Jonathan? I haven't been on one of them in 40 years, but I can't imagine it's changed much. Take forever to get up there, and they fall like the... That's the front page of VectorVest. Now, this has changed since I had to do this for these young fellas at the back. On VectorVest today, the short-term trend of the market is up, but the longer-term trend is still down. So we're advising our worry-free investors to hang back until the long-term trend changes. Still hasn't changed. The young fella who's the spread better, who's in fact checking his girlfriend, is not two-timing him while he's at the show, would already be in. And that's just a blow up of the same thing. If you come to our stand now, you'll see that both these things are saying up, up. Short-term trend is up, longer-term trend is still down. Short-term players should be in, getting their feet wet. Longer-term fellas like myself should be sitting and waiting. Doing nothing is much more difficult than it would seem. Much more difficult. So that's our market timing chart, folks. That's since the COVID, that's since the plague hit. That's our sell signal. In this period, you want to be a wimp, watching stop losses carefully, not buying any stocks. Use your loaf. Gung-ho. That was a sell signal that came to nothing. And the fundamental behind that, that was the announcement. Remember the Pfizer announcement that came out that saved all our bacon? It ran again. We had a great run here. And then we went into this little bit of chop. There are three certainties. 1, death. 2, taxes. If you're a trader, the third one is called whipsaw. Means you go nowhere. And we got whipped up here a little bit. When you get a sell signal, folks, you don't sell everything, but you want to be very careful, watching your stop losses carefully, managing risk, not buying anything more. And here, on the first week of January, we broke that little triangle, for those of you that are technicians, and we're still in a downtrend. Didn't want to be buying anything. If you believe in stop losses, then you would actually be raising a little bit of cash in that period, which I personally did. I'm waiting on the next signal, which I think is close, but it hasn't fired yet. So I haven't got much time. I just want to get to this. We have a search that'll find these. Now, here's the plan. When we get a confirmed up, which is our buy signal, which I think is a day or two away, you want to buy into 10 or 15 stocks, depending, 15 let's say, spread it across the market, no more than 2 or 3 in any one sector. But over a week or 10 days, you want to build yourself up to being fully invested. If the general market is rising, you have to be fully invested to whack it. Now, sooner or later, there's going to be a down signal. There's going to be a confirmed down. That should be red. Why it's blue, I really don't know. It's normally red. That should be a down signal. That should be red. That's a bad one. When you get a down signal, stop all buying. Watch your stop losses very carefully. Maybe raise some cash. If you've got a stock that's done nothing in the last up run, then there's not much chance of it doing much when the general market is falling. So raise some cash so you've got a bit of ammunition for the next buy signal. That's the process. And that process has been working well. I tested it till I'm blue in the face until 2016. After 2016, I stopped all back testing, and I've been testing it going forward with my own loot. I put 70% of my money into this methodology, and 30% I've scared him away. His girlfriend's clearly playing up. I spread bet with. My longer term stuff is in either an ISA or a SIP, and the spread betting is with a spread better, and that means that I've minimized my tax exposure on all three accounts, which, if nothing else, helps with the accounting. So that's the process. That's what it did in 2021. It was up 18% excluding dividends. Market was up 12. That's what it did in 2020. Not a great year, 2020. Clearly you remember COVID. This is the whole year. It still outperformed the market significantly, and most of them paid a dividend. But we had a cracking year in 19. It was 3x the market in 2019. And that was what happened in 2019. 50,000 went to 72,000. There were 2 trades in the whole year. 2 in the whole year. So you're not going to be rushed off your feet with this. Just remember, undervalued stocks, stocks that are growing their earnings aggressively and safely, that are on buy recommendations. You want to be very aggressive in the market when the market is giving a buy signal, a confirmed up, and you want to be very timid in the market when the general market is falling. On the next fall of the general market, you don't know whether it's a huge bear market that's going to last years or whether it's a little 2-week pullback. You just simply don't know, and anybody who tells you that they do know is bloody well lying to you. Nobody knows what's going to happen next for sure. Nobody, not in this environment. You get 2 Nobel-winning economists who are arguing diametrically opposing positions. That's what it's done over the last 10 years. That's, unfortunately, there was drawdown there before we got out. That's what it's done. That was 2020. And that, ladies and gentlemen, is a 312% gain, and that's a 17% compounded rate of return, excluding the dividends over the last 10 years. Now, that system is on VectorVest, and all you've got to do, if you like the system, you can press a wee button. It will convert the system onto the portfolio manager, and every time there's something to do, the darn thing will send you an email. If you are in the US, it can actually speak to your broker, but the FCA say that that would be, in fact, financial advice, and we can't offer that in the UK. You still, sir, I've got to press your little sweaty finger on the button to make a trade, because if we did it automatically, it would be financial advice. I tried to argue that the individual programs it, so it's essentially the same thing, but they said no, you still got to make that trade yourself. So that's our worry-free methodology. If I was managing your money, young fella, if I was managing your money, I would put 70 to 80% of it into this, and with 20% I would do some more aggressive swing trading. I do another seminar. Not doing it today, but I do it online once a week, where I show people how to go about swing trading with VectorVest. Now, every Monday afternoon, I do a webcast to the clients. My American colleagues do webcasts on a Thursday. If you have a problem with VectorVest, you pick up the phone. There's an 0800 number, and that gets you straight through to our call center. The call center is in North Carolina, but the call is, let me give you some Zulu. The call is from Mahala, which means free in Zulu. Okay? 1 minute to go.
The roaring peroration, yeah.
Pardon?
For the big finish.
A big finish, okay. Is your mind in Cheltenham? Mine is. My money's there as well. Okay. I'm thinking of buying Willie Mullins, the Irish trainer, has been so good to me this week. I'm thinking of buying a Trilby. I think it looks really so good on him, you know. So folks, just keep it simple. It's so easy to get carried away. undervalued stocks, stocks that are growing earnings strongly and safely. There's very few of them in the UK. Not that, there's 20 or 30 really good ones in the UK that are on buy recommendations. It's 70% of the exercise is knowing when the overall market is rising and when the overall market is falling. When the overall market is rising, you want to be very aggressive. When the overall market is falling, well, you want to be watching stop losses carefully. You want to be raising some cash so you've got some ammunition for the next upswing. We're just up around the corner. Normally online, VectorVest offers a 30-day trial. We've been at Master Investor now for the last 10 years, so we know the guys well. So we're offering a 60-day trial for a fiver, £5.95. If it's not for you, it's not for you. We shall remain friends. If it is for you, then it's £49 a month. It's on a month-by-month basis. And my promise to you is if we can't make you money, you stop at any time. I've been associated with VectorVest now for 11 years. In 11 years, we've not ever had a problem with a credit card, ever. And it certainly won't start now. Thanks very much, folks. Take care.